Today, we're tackling a really interesting economic puzzle. You'd normally think, right, that tariffs, those taxes on imports would make a country's currency stronger.
Yeah, that's the standard logic. Fewer imports, more demand at home, stronger currency, simple enough on paper.
Exactly. But look at the US dollar under President Trump's policies. Well, something else entirely seems to be happening.
And that's really our focus today. We're diving into why the US dollar is actually near its weakest point in about 3 years. It's completely defied what Wall Street expected, even with those tariffs in place.
So, we want to unpack the reasons, the effects, and, well, what this unexpected turn really means for everyone globally.
Precisely. Let's start with those expectations.
Okay, yeah. So Wall Street analysts, they were mostly expecting the dollar to get stronger in Trump's second term, weren't they?
They were. The reasoning seemed solid.
Yeah.
Tax cuts, boosting growth.
And tariffs cutting down on foreign imports. Both should theoretically push the dollar up.
That was the playbook. It seemed like a pretty safe bet at the time.
But the reality
It's
is,
starkly different. The US dollar index, that basket measuring it against other big currencies, it's down almost 10% this year.
10%. Wow.
Yeah, hovering around its lowest since 2022. It's shaping up to be one of his worst years in decades, actually.
Okay, so if tariffs were supposed to help, what's actually pulling the dollar down so much? What's the real story?
What's fascinating is that it doesn't seem to be the tariffs themselves, like in a vacuum. It's more about the intense uncertainty surrounding them.
Uncertainty. How so?
The administration's sort of back and forth on implementing them, pausing them, then hiking them up, then maybe lowering them again.
So it's the constant shifting, the unpredictability.
Exactly. That seems to be the big market mover here.
So it's less about the policy itself and more about the process, the lack of a clear path.
You've nailed it. Barry Eichengreen over at UC Berkeley, professor of economics and political science, he put it very simply. He said, investors don't like uncertainty. Full stop.
Makes sense.
And he argued that this lack of predictability has really dominated the markets this year, pushing the dollar down.
And that clouds the whole economic picture.
Right. It's led to this growing feeling, this consensus that U.S. growth is actually slowing down. The uncertainty breeds pessimism, basically.
Okay, so investors hate uncertainty. That feels intuitive. But is there maybe something deeper going on, more fundamental than just market jitters?
That's a really good question. And it points towards, well, confidence, or maybe a lack thereof. Arun Sai, he's a senior strategist at Pictet Asset Management. He suggested the dollar's fall reflects a kind of growing crisis of confidence in the U.S.
A crisis of confidence? That sounds serious.
It is. He argues that the sheer unpredictability from the U.S. administration makes it